Welcome back to another 2-Minute Tuesday, and this week we're going to cover what is an ETF and how it works. Andrew here. Thanks for joining us for another 2-Minute Tuesday. I'm really excited to have you back with us to keep learning and growing or using these as a little refresher. So this week we're going to talk about what is an ETF. So with that said, let's go ahead and drop 2 minutes on the clock and get started. An ETF is called an exchange traded fund because it's traded on an exchange just like everyday stocks. Now, they're very similar to a mutual fund, as an ETF is a basket of stocks or commodities or even bonds, and they can even track an index just like an index funds. ETFs can also be focused just on US-based companies or international companies as well. One of the benefits of an ETF is they tend to have way lower expense ratios than traditional mutual funds. And if you recall from our 2-Minute Tuesday video on what is an index fund, these lower expense ratios can save you tens of thousands of dollars over your lifetime. And then one of the other big takeaways you should know about what an ETF is since they're listed on an exchange, you can actually buy and sell them at any point during a normal trading day. Because you can buy and sell an ETF right away, it means you can get out quickly or buy in quickly. But that can also be a negative. This opens ETFs to a lot more price fluctuation. And then finally, ETFs are a great option to invest in along with mutual funds and index funds. But like everything, there is some risk. So you want to make sure you do your research on ETFs and make sure it's going to fit into your overall investment strategy. Now, if you haven't checked out the videos on what an index fund is and what a mutual fund is, I'll put them up right over here, and definitely continue to educate yourself and check those out. And as always, if you have any other questions, please let us know. An ETF, they can even track, and they can even, but that can also be a big, but that can also